Watch out for this 20-day moving average. That's going to be the first test of support here for the markets. That's going to potentially set up a little bit bigger decline. And again, the 100-day moving average is kind of the running support line right now. So it is possible that over the next, couple of weeks, we could see this market kind of trade lower. That's entirely possible heading into the election. So let's talk a little bit about what you need to know before the bell. There's a couple of things going on I want to touch on relative to the markets today. Some of it we talked about yesterday, but some of it today. Yesterday, the markets did sell off, and we had this kind of first initial pullback that we've had. The markets had kind of peaked out over the last few trading days. You kind of start seeing this, kind of this rounded top that is kind of typical of an exhaustion move in the market. So once markets have moved so much that buyers get exhausted and markets kind of start to round off a bit, and so that's how you get these corrections. And we saw this back, previously, each time. So you kind of see these kind of this stalling of the market. It's like throwing a ball up in the air. It will go up very rapidly, then it'll start to slow down on its acceleration until it pauses and then comes back down to earth. Kind of where we are right now with the markets. So yesterday was the first kind of crack that we saw, and of course that was off the back of this Iran-Israel escalation. That's continuing overnight with Israel now vowing retaliation back to Iran's retaliation to the first retaliation. You get it. But watch out for this 20-day moving average. That's going to be the first test of support here for the markets. That's going to potentially set up a little bit bigger decline. And again, the 100-day moving average is kind of the running support line right now. So it is possible that over the next, couple of weeks, we could see this market kind of trade lower. That's entirely possible heading into the election. Now that would, potentially be a good thing for investors. We're very close to triggering a pretty elevated MACD sell signal. That would suggest also a bit lower price action in the markets. And we're starting to work off some of that overbought condition that we've talked about. So again, a week or two of kind of either sloppy trading, sideways trading, or a bit of a correction will kind of alleviate those conditions as we move into earnings season. Buybacks, of course, are pretty much blacked out at the moment until the end of the month. So that correctional process in October, if we get it, right, if this correction continues and we can work off some of this kind of overbought condition, that'll be a good setup for investors to put capital to work moving into the end of the year, as we should get a kind of year-end rally post the election. Yesterday, we had touched on the fact, and this was really kind of early in the morning, but we touched a little bit on crude oil prices. And again, crude oil had a very, very big jump yesterday. And we discussed previously that crude oil was very oversold, had come up onto a buy signal, and that because there was a lot of shorting in that market, it was kind of really primed for a bit of a reflexive rally. We kind of targeted out 73 on that move, and we're almost there already. Just 2 days, we went from basically about 67 to 72 yesterday. So again, won't be surprised to see oil a little bit up more again this morning, but we're going to start running into resistance here between 73 and 76. So if we can't clear the 50-day moving average on oil, that's going to potentially give a bit more oomph to oil prices heading into the end of the month. But again, this is all going to kind of revolve around if there's a very quick de-escalation of what's going on between Iran and Israel, we could see that kind of move kind of fade here quickly. So again, we've been holding our kind of energy positions as of late. We had trimmed them back previously, still holding onto those, but again, now those are starting to perform well. Energy did very well overall in the markets yesterday. Volatility also just is interesting here. Now, again, we have to look at this at a pretty short-term basis because, again, there's such kind of big spikes. But we had this very big spike in volatility back in August, and this was the whole Japanese yen carry trade blow up, and of course that very quickly faded, and we went right back down into kind of normalcy for that. Interestingly enough, over the last couple of months in particular, volatility's been very slowly kind of rising here, and now it's been very quiet, but even though the markets have been pretty complacent, we've had this kind of very gentle rise in volatility kind of coming up here. So again, we're trading right around 1945 on volatility, and this is typical of what you can see before you get a short-term correction in the market. So this is just kind of another indicator that with kind of this rising volatility in the background, we could see a bit of a correction here. That's what you need to know before the bell this morning.